The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 18th. Terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go look at one of our tools. This is the tool I call Fool Me Once, Fool Me Twice. Well, folks, you know the rest of the story. Now, no matter how much we prepare for one turn of fate, something will sneak up when we're least expecting it. I think it was Inspector Jacques Clouseau, or better known as Peter Sellers from the Pink Panther movies. Maybe some of you have seen those movies out there. I believe he's the one that used to say, when you least expect it, expect it. You know, use that in your trading. When you least expect it, expect it. Now, when that time comes, the people who triumph over unanticipated situations are the people who are just simply ready to adapt. You know, wise old gentlemen used to dine every month at the Citrus Club in downtown Orlando, sitting at a table covered with a white linen tablecloth with silver candlesticks and served by tuxedoed waiters. And after dessert was served, he would launch into one of his many stories of, "Did I ever tell you about the time when?" Now, the cool thing was that no two stories were really ever alike, and there was always a wealth of wisdom through example, a motherlode of remarkable instruction. I learned a long time ago that I had 2 ears and 1 mouth, so I'd better listen. Now, this old, wise gentleman, very old, yet so wise and so flexible, had but one ironclad rule, and that rule goes like this. He said, "Fool me. If a man fools me once, I think, that's not nice, and I remember it. If the same man fools me a second time, I think, shame on you. And if the same man tricks me a third time, well, I've been warned and I should have changed my ways and didn't, so shame on me." Folks, if you're not changing your responses to the situations and circumstances that make up your life, you're not being flexible, and you're throwing away the greatest asset that each of us have. We can't control external events, only the way that we adapt to them. None of us knows which cards fate is going to deal us, but we can control how we play those cards out. That is and always will be our greatest asset. Control what you can control. And I say, when you least expect it, well, expect it. Let's go check out the cards of fate in the marketplace out here. Right now, we've got the Dow futures up a whole 15 points out here, trading at 15,136. We've got the ES Mini basically flat, trade at 1634 and a quarter right now. NASDAQ futures up about 6 points at 2970.50. Russell 2000 pretty much flat as well, trade at 986. The King dollar on the move. That's up about 15 ticks at 81.10. The euro flat. The Japanese pound, that's got some movement in it. So does the pound. Did I say the Japanese pound? If I did, I meant the Japanese yen. But the British pound, that's what my eyes were looking at. That is getting pounded here this morning. We'll certainly check in on that currency pair. Gold is off about $9 right now at $13.74. Silver is flat at $21.74. Light sweet crude continuing to move higher. $98.30 is its last trade out there. Across the pond, let's go see what's going on in Europe. Right now, we've got the DAX is up a whole 9 points out there. The FTSE, though, after putting in that hammer candle a few trading sessions ago, continues its move north, up almost 1% this morning, up $59. Our call-in number is 877-927-6648. Give us a call, folks. We can take a look at your stock. Let's start off by taking a look at the currency world, because when you least expect it, I'd say you should expect it. And I'm expecting to see a market that continues to move northward. And also we'll take a look at where those areas may be. Why is it that I think that? Well, first of all, the chart that we're looking at, if you are watching us on TigerTV, thank you so much for doing that. If you're listening on your mobile device at TFNN.mobi or maybe a radio station, we appreciate that very much. Remember, the live stream of this show can be obtained on your smartphone device. Just go to the homepage of TFNN.com. On the right-hand side, over in the right-hand corner, you'll see a button with 3 little smartphones on it. Click on that button. This show will stream live to you. And, of course, the archive of this show is on Channel 9. Now, we're taking a look here at the Euro-Japanese yen, the currency pair that does the best job of tracking the U.S. stock market, the best job at this point in time. We can see that this had formed really 2 butterfly sell patterns. One was a 1.618 expansion, the other 1.272. And its initial work basically has been done as it created this little hammer candle. And that was on the trading session of June the 13th out there. And then we saw a push lower. That pushed lower on the following trading session, that area now being rejected. Now what we should see inside this currency pair, we should see this do a little bit of a bounce out here. That bounce moving it up probably to about the 130.41 level, as that is what will give the U.S. markets the fuel in order to move higher before we get our next real sell signal out there. So that's what's going on inside this currency market. If you are looking at us on Tiger TV, the black line on the chart here, that is the S&P 500. You can see directionally how well this currency pair tracks with the actual U.S. markets out here. And that currency pair right now is on its way north as well. Now, let's go check and see. Let's go take a look in at the futures, at the U.S., at the ES Mini here. Let's go see what they, in fact, were doing here yesterday. We were taking a look at, let's see, this is the 120-minute chart that we are looking at. And on that 120-minute chart, as we came into the trading session yesterday, at the, what we really saw first was, we saw a breakout of that downtrend price channel. That is the downtrend price channel that, in fact, we're in. That goes back to the trading session, the actual open of the trading session at 1:30 in the afternoon on May 22nd. The high that was put in there was 1675.50. And what we saw here take place yesterday, it tried it on Friday. It was a failed attempt. That was coming in, again, a 120-minute chart, so that's the segments that we're looking at here. The first failed attempt took place at 11:30 on Friday. Then at 5:30 yesterday morning, there was a breakout. Now, how do we know that that was a real breakout? Well, coming into our 9 o'clock session out here, we actually saw price move back to the top of the descending price channel out there. That was in the 1629 area, and price continued to move north. It continued to move higher. What was it doing? As it was moving higher, it was moving into resistance out here. In fact, the resistance line, we can go draw it in on this. We'll just simply use the bottom of the bar here as the price move was moving down on May 22nd out there. We'll use about the 1642 level. We'll go ahead and put a black line across our screen out here. We can see how this level here really recently has acted as resistance. You can move it a tad lower out here. We'll go ahead and do that here just for the moment. And so right now what we can see here is that the price is really traveling in a little bit of a sideways range. But yesterday, we saw a little bit of a sell-off. Now, we saw that sell-off because if we go to the intraday chart, if we go to the 30-minute chart out there, what we will see is we will see that the market, on using the EKG of the system, the market was certainly in an overbought condition, and it needed to work its way off. Well, it worked its way off yesterday. Did it with regard, I think somebody in the Financial Times had put out something about his thoughts on Ben Bernanke, and the market just simply very twitchy out there and just sold off. But what it really did do, who cares about the news or what was behind it? What we know that took place out here was price moved back down yesterday in that 2:30 session, moved back, and it tested that the top of that descending price channel again. That area held. We saw a move higher. We saw a bounce off of that. What we have not seen, because it is a wide-bodied candle here, we have not seen the move outside of that body. That's what we need for an additional confirmation that, in fact, price is ready to then move up into that 1657 level. But if the currency is giving us a clue, which I believe that it is, that will be the fuel in the fire that moves these markets higher out here. And where to? Probably about that 1657-ish level. As it gets up there, that'll be a 0.786 retracement of the move down from the May 22nd high all the way down to the low that we're tracking here, which came in at 1:30 in the afternoon, or during that session, I should say, on June the 6th out there. We know we've got high volume there, so we know the market wants to move down, but I believe that first what it wants to do, wants to try to push its way higher out there. That is on the 120-minute chart. If we go take a look at that 30-minute chart, we go take a look at what it also was doing yesterday as the market was pulling back. We can see that there is a resistance area. In fact, old resistance now really becomes new support out here. So right now what we're seeing inside on the ES Mini, we're really seeing the test here, because right now it's traded out at 1633 and a quarter. No big deal out there. And as we take a look at this, it's really just testing the resistance, the old resistance level. We'll see if this will hold as a support. Now, yesterday, what happened as the market pushed down, what it also did on the 30-minute chart, it moved right down into that 200 exponential moving average, 200 period exponential moving average. So price moved down. That held things in check. We can see here as we take a look at yesterday's action, you can see price was inside the overbought territory. It had to work its way up. Off, I should say, and it does that either by moving sideways, which it really did from the 11. The high that came in was at 1641 yesterday during the 11:30 session. Then we saw it just simply move sideways up until about 2:30 in the afternoon when it went ahead and really worked that condition off. It did it quickly, got down to the 200 period exponential moving average. Inside the 30-minute chart out here, we've got a butterfly pattern. A 1.272 butterfly. That comes in at the same prices that we're looking at on the larger 120-minute chart, and that's got the Gartley sell. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Not really anything changed here in the futures marketplace. I see some chatter in the den talking about Jimmy Hoffa. One of the jobs I used to have in my early years was one of the things I did was painted parking lot stripes out there. And I did that for several hot summers out there, and certainly learned that that was not a profession that I wanted to be in, but it was a good way to make a few bucks on the side. And the day that Jimmy Hoffa actually went missing, which was it was a Wednesday in 1975. I don't remember when it actually was, but I remember it was a hot summer day. And the guy that I worked for, the parking lot stripes that we were painting inside that day was actually down at the Teamsters Union in downtown Detroit out there. So I remember that day well. They're still searching for his body. Kind of strange all these many years later that they're spending so much time trying to find the remnants of Jimmy Hoffa. In any event, here, let's go check out the currency markets here. That's where we've got the most movement. Right now, we'll take a look here at the euro U.S. dollar. That's got that nice Gartley sell pattern. Had a nice 1.272 expansion. I mean, had all the great Fibonacci numbers out here. Really just traveling sideways ever since that pattern completed and formed, which was on June the 12th out there. We'll see if this pattern here plays out and works. If we take a look at the Great British Pound, I did mention that truly is getting pounded. That pattern here is working clearly. And that is the 0.618 Gartley sell pattern as well. So it's the exact same pattern that you could see inside the euro-US dollar currency pair. However, it's the pound that really has taken off. It's taken off very well. So where's the first pullback area inside this? Right now it's trading out at 1.5577 out here. If we go all the way from the low to the highs out here, the 1.539 is going to be your first. That's your dead cat bounce level. The second level is going to be 1.518 out here in the marketplace. So this one is truly moving to the downside. That Gartley sell pattern truly working out. If we take a look at the U.S. dollar, Japanese yen out here, that had formed a 0.786 Gartley buy pattern. They completed that pattern here on June the 7th. That level was tested for a couple of trading sessions, really several trading sessions, June 13th, June 14th, as well as yesterday. Now we're starting to see a little bit of a move north. Where is it that this could bounce to? Let me try to get rid of a couple of things out here. Just a normal move is just simply going to go from the high to the low. As we take a look at the retracement level, that's going to be your May 22nd high at 103.72, all the way down to the low that was put in here on June the 13th. And it looks like the first bounce should take us to 97.58 inside the U.S. dollar, Japanese yen. Maybe it takes you all the way up to the 0.618 retracement around 99.93 out there in the marketplace. If this, in fact, fails, this will turn into a butterfly. This is a 0.786 Gartley buy pattern. It's been tested really ever since the day of June the 7th out here. So if this pattern fails, this will turn into a butterfly expansion. That butterfly expansion will take price all the way back down into about the $89.50 range out there. That's your 1.272 expansion of that pattern out here. Let's go take a look at, so that takes care of the currency marketplace for the most part. Let's take a look at the King U.S. dollar index. Let's go see what it is doing. The U.S. dollar index here trading a bit higher. Not a ton of conviction here behind the move. We can see the U.S. dollar index did move down into the oversold territory. It did that here using the relative strength index. It did that on June the 13th as it made its most recent lows. We haven't really seen substantial bullish candle signals here yet inside the U.S. dollar index. It is just slightly below the 0.618 retracement level, which is actually 81.08. It's at 81.06 right now. If, in fact, this area here fails and we see price move lower, 80.13 would be the number or the area. That is your 0.786 retracement of the move. Let me make sure that I'm using. Yeah, that's of the move off of the lows back in February all the way up to the high that was put in here on May 24th. We take a look at Goldilocks, see what's going on inside gold here. Pulling back a bit. It is off about $10 this morning, trading at $13.72. Gold has been very, very quiet. Very quiet. You know, I've been looking for it. So there's a couple different things going on, or two different things at least going on inside gold. Number one, we know that it continues to trade inside the April 16th candle. And so long as it does that, says that, okay, it wants to go down and test the lows out here. That would be about $13.2150. We also know, or at least I know, and I communicate to you, that the large commercials out there, the ones with the real big bucks, they are taking super long positions inside gold. So gold is going to form a bottom. But it's been super quiet out here. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 47 points, trading out at 15,288. S&P up 3 at 1642. Composite up 11 at 3463. Russell 2000 up a couple of points, out at 989. Google up $6. Apple flat here. Microsoft down 6 ticks. Intel up 14. Cisco up 14 ticks as well. Leading the charge to the upside, we've got Transdigm Group, TDG, up 4% this morning. I do not see the news necessarily behind this, but that is the leader in the clubhouse. Google right behind them. Coinstar, CSTR, that's up about 3% this morning, up $1.75 or so. Amgen up $1.42. Fleur Systems, FLIR, up $1.47. That's up 6% this morning. Amazon up $1.41. Rackspace Holdings up 3% this morning. To the downside, we've got Fact Set Research, FDS. That is off 5% this morning, off $5 and change. Restoration Hardware, I seem to remember they had a great session a couple of trading sessions ago. We'll go take a look at that, see if that is a gap down here this morning. It's trading off about $3.50. Anheuser-Busch, this bud is for you, off $1.10 right now. SFL, Ship Finance, off 91 cents. So not a lot to the downside dollar-wise out here. So let's start taking a look at some of these charts and see what's going on out here in the marketplace. Let's see, RL, is that Restoration Hardware? No, that's RH, is Restoration Hardware. RL must be Ralph Lauren. So let's go check out Restoration Hardware. Ticker symbol again is RH out here. And, okay, so this thing had gapped up with some big volume here. So the pullback so far this morning, not a big deal here. We'll see if it actually comes back and tests out the low from June 14th. That low is $66.96 out there. So the pullback here, not a big deal. What would be a big deal is if this thing ever does gap down here, gaps down before actually just filling the gap, because that could create island reversal candle if we were to see a gap down. Now the gap down would have to now take place tomorrow, and that gap would, assuming that today does not get down to the 66.96 level, you'd need to see a gap down below that level of 66.96. So that is on Restoration Hardware. It does need to work off this extremely overbought condition out here, but it can easily do that by just simply moving sideways. This is one that let's see, volume so far this morning, 400,000 shares. On the move up was with 3 million shares. So it's got some pretty decent volume in it this morning. So we'll just keep this on my earnings report tab here. We'll just watch this over the next couple of days out here. You know, one of the equities we were looking at yesterday was ticker symbol was TEX. It was, what was that? Texas, what? Let me see here. We put it in my system. Terex Corp out here. That had moved down. Look at the volume inside this equity. Now, this had gapped down yesterday, but we know and this case was testing the most recent swing point. Volume yesterday was 14 million shares to the downside, going against a swing point on April 19th that only had 2.2 million shares here. So they're not really out of the woods. Although they do have right now, we'll see if this area continues to hold and becomes a strong area of support. If it does fail, meaning it closed below 26.90, this will set up a move down into the July 26 area, somewhere around $16 or so. But yesterday, considering the move down, you had a nice green candle, but, that really isn't necessarily bullish. You need to take into account the gap of yesterday's candle. That was on Terex. Let's go take a look at this Fact Set Research. FDS is the ticker symbol. And give me a moment here to let me check, do one other thing here. So FDS is the ticker symbol. Oops. Let me make sure I can type this well. FDS is a ticker symbol. Gapping down this morning. Let's go see what this is actually trading into. I want to go ahead and clear a couple of things off the chart. Just start with a fresh chart out here. So give me a moment to do that. Delete it all and start over again. Okay, let's see. What did I want to put up here? We want to put this one up. Okay, so now let's take a look at it. So far this morning, down with a volume of 267,000 shares. It is trading into. Let's just see what kind of candles we have out here. No hammer. What is this thing going to trade into out here? It's got this. I'm going to pull this back a little bit further. So this thing had run into resistance yesterday. Let me get rid of these other lines on the chart here. Can always add those back in. But let's take a look at this because, we teach about things coming back into a breakout area. And also we want to buy breakouts. You want to sell breakdowns. Well, if we take a look at this equity here, this thing broke down with substantial volume, 3.2 million shares on June 12th. Now, the trading session before is where I'm going to use as the actual breakdown level. And that's going to be at the price point of 104.49 out here. I'm using the low of that candle. I need to use both the low and the high, but you've got that gap here, and gaps are very important, both for support and resistance. So that's why we're using the low of the trading session from June 11th, which was 104.49. Now, As we take a look at price bouncing back up into that area, it did it here on September the 14th. Now, what you want to really notice at that time as this was moving up, and this is fact set research. The ticker symbol, again, is FDS, if you're following along on your home game out there. As this thing was moving up, it moved up with 390,000 shares right into that open window, right into that right into that gap out here. That was going against even 411,000 shares, which was the day before the gap down that had that volume spike of 3.2 million. So coming into the base, we'll call it, and it was also in extreme overbought territory. So it rejected that area, and it rejected that. It couldn't bust it up. It tried to bust it down by coming, all the way back into the level set up by the swing point at around June the 28th, right around 88.64. It actually got a little bit lower. But what we can see here, what I'm going to draw on here, is the actual consolidation that this happens to be in. So we'll go ahead and we'll make that a black line as well across the bottom of the screen. So the consolidation pattern for this is right around 87. So you're going from 87 to a level of about 104, 105. So what does that make it? 87, so you get about 20, 23, so about 27 points. So it's not a bad little consolidation area. Now, the last time that it was up here, as we can take a look at it, happened to be yesterday. So yesterday it makes a move, gets to a high of 104.85, does it with decent volume, 1 million shares, but still that 1 million shares was still going against, you know that you had a tested area of resistance. Now we have that third test of that level, because the second test actually took place on September 24th. That also had 1 million shares, wasn't enough to bust that up. And now this morning we're seeing it, gaps down. It's trading off of its session lows, but what you might want to do is put this one on your list of stocks to take a look at because of this nice consolidation level, and take a look at it as it comes down into the price range of somewhere around $86 or so. Looks like the level that should hold is probably the price point of 86.88 out there, and that is on Fact Set Research, FDS, which is the ticker symbol. I'll pull this back a little bit further out here. So it's really got a nice little consolidation pattern that it has been trading in, because we could actually take that consolidation back even further out here. So take a look at, it's a nice consolidation level. Really been consolidating at these areas since October of 2011. So it sets up a nice little I think that was $27 or so, but somebody will correct my math. I'm just multitasking here. So it looks like about a 27-point consolidation, which means whichever way it breaks, you can take a look at about 27 points to the upside or to the downside out here. So right now it's moving back down towards its lows, and if this thing gets into about $86, it might be worth a nice trade out there. Let's go see what else do we have here moving. Let's go take a look at something moving to the upside other than these markets here. Right now we've got Transdigm. TDG is the ticker symbol. So let's go see what TDG is doing out here. Give me a moment to pull that up on my screen. What it's doing, it's up $8 and change, up 5%. So we're going to go ahead and erase everything off of this stock chart as well, and then we will just simply start over. That'll take me just a couple of moments here. That is gapping up nicely. We'll check out the volume behind the move. So far today, moving up 184,000 shares. That's up over a swing point that had 556,000. So, and that was on May the 15th. So this most certainly does have some nice volume behind it. TDG, again, is the ticker symbol that we are looking at. Let's pull this back even further. So this is up at all-time highs now. And it is moving into a bit of an overbought condition out here. Let's go take a look at a longer-term chart, see if we can see any A to B equals CD patterns. We'll go ahead and put the weekly chart up on my screen here. Boy, this has been a little rocket ship. Here's another nice IPO. This is what you would have liked to have seen Facebook do. This thing IPO'd back in 2006 at a price level around $25 to $23 and change out here. I went ahead, moved higher, came back to that original area where it had where the IPO was back in November of 2008, and it's been basically a straight line move up. Pretty tough to come up with an A to B equals CD pattern on this equity. It should have some pretty decent support here. This is the weekly chart that we're looking at. So if we take a look at these high volume areas, it really takes you back into December of 2012, December 2012, and that area has held. So it's got some pretty decent support at about $124.79. It's up at $160. If we take a look at any kind of retracements, all the retracements on this have been really small up at this point. So it's hard for me to tell you where this equity is going to the moon and higher. And certainly it's got some volume behind its move here today. That is on Transdigm out there, TDG. I think this is one of the IBD 50 stocks out there in the marketplace. Let's see here. Let's take a look at what else we got moving here. Hormel Foods, HRL is the ticker symbol. So let's go see what Hormel is doing out here in the marketplace. This thing has gapped down this morning here. Let's go take a look and see what this thing is moving down into. Again, the ticker symbol HRL. Moving down and testing this swing point here recently, which was from June 6th. So we know that's an important swing point, at least with regard to the indexes, the ETF structure that is out here. In this case here for Hormel, that level was 38.45, 1.4 million shares. On the move down this morning, it's got 229,000 shares in the first 15 minutes of trading. So it's trying to take out a B point. Again, that low would be 38.45. If it does take that area out, let's take a look at the A to B equals CD down that this would be forming. Your A point is going to be the May 15th high, 43.17. Your B point is the candle. It looks like a hammer, but it's not. That is on June the 6th. That's out at 38.45. And the retracement looks like probably about a 0.382 retracement. Retracement I'm referring to is the retracement, your B to C point. Yeah, about a 50% retracement out there. Says that this should move down to around the 36.21, 34.92 level out here. And if we take a look at, it's got this big volume breakout area, and this is Hormel back on January 3rd, I should say, at a price level around $32. So the top of that is 33.82. The 1 to 1.272 is 34.92. I suspect that is where Hormel wants to travel to. Is right around either the bar of January 4th, 34.33, to the level of about 33.82 on January 3rd. That's if it, in fact, takes out the B point out here. It's going to have the volume today. Whether or not it's got the price to move below 38.45, that's another thing coming. But we do see a couple of gaps down. So the trend on this thing is most certainly to the downside. It had gapped down with 1.2 million shares on May 23rd, and today already 239,000 shares. So seems to me like it has more volume than that first gap down out here. That's on Hormel Foods. Let's go back in. Let's see here. What's the... do with the Hormel. Oh, okay. So in any event here, I was just looking at the dance, so my eyes were kind of darting around here. Let's go take a look here. Let's go back to the index futures just to see what, in fact, they are doing out here. So give me a moment to get that tab here up on the screen. So back at the 30-minute chart out here, this morning it was really coming in and testing the old resistance line that now really becomes new support out here. The key is going to be inside the futures is getting a push above yesterday's high, 1641. Really, the real level is going to be 1642.50. If we shrink down this chart here a bit, that's really the last area of resistance that it would need to get through in order to go ahead and fulfill and complete the 1.272 butterfly sell pattern in the 1650 level. So we'll see if it can find the energy to do that. Again, inside that currency pair of the euro, the euro Japanese yen. This is now the shorter term chart out here that we're looking at. And if you take a look at this is a nice chart because it's got two butterfly sell patterns, a longer term 1.272, a shorter term 1.272. That says the next move should be up into about the 128.86 level. We'll come back. We'll take a look at the pattern here on the euro Japanese yen, and that continues to move higher just as our market should as well.
Yeah, it's always better when we're together.
take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up 67 right now. S&P is up 4. What I've got on my screen here is the Euro-Japanese yen. I've got the 5-minute chart on my screen. The red line is the ES Mini. And so what you can do is you can pay attention if you, I don't know how quickly it streams across on your device, but you can watch the Euro-Japanese yen tick as it ticks up. The ES Mini follows just shortly behind it. As we see a move down in the Euro Japanese yen, we see a move down in the ES Mini as well. And this is just helpful to be able to show you and to be able to identify that the directional correlation between this currency pair and our U.S. markets is just simply, it's uncanny. And so that means that it's very helpful, so you're watching it actually unfold. Maybe I should have just done it on a 1-minute chart out here, but, you get the picture, or try it on your chart out there. And why is that important then? If we know that correlation exists out here, then what that means, it means that we must take a look at longer-term charts just to try to understand what's going on inside the marketplace. Because, remember, Inspector Clouseau, he used to say, when you least expect it, expect it. Well, let's take a look here at the, so I got the black line. I'm going to get rid of that black line on here. I'm going to try to get rid of some of the stuff. So this is a 30-minute chart now that we're looking at on the Euro-Japanese yen. But what it did form was two nice expansive patterns out there. Where that rubber band gets really wound up and very tight. So you got the 1.272 butterfly. This one, this butterfly pattern comes off of the low that was put in on about 22:30. So what is that? 10:30 in the evening on April the 28th. So you had the expansion from that low all the way to the high that was put in sometime around 10 in the morning on May 22nd out here. Hey, when was the high put in our markets? Oh, yeah, that was May 22nd as well. So now as we take a look at the move down here, the expansion of that pattern inside the Euro-Japanese yen, we're looking at the June 13th time frame now, and that created two butterfly patterns. So two butterfly patterns coming together at the same point in time. That's kind of an indication that, might be a place to go ahead and put on a trade here. Now, the very first thing that the Euro-Japanese yen, and I'm taking the smaller pattern out here, so that means I'm coming off of the high that came in at 6 in the evening on June 10th, all the way down to the low from June 13th. So if we take a look at the dead cat bounce, a 0.382 retracement, what we can see is that the Euro-Japanese yen, and that was when we saw a big bounce in our marketplace. That was being June 13th. So you had basically a straight line move up, and what the Euro-Japanese yen did on the 30-minute chart ran right into that green squiggly line out here. That is your 200-period exponential moving average. Also, what was it doing? It was getting into extreme overbought territory, makes that move, and then what it does, it makes an A to B equals CD down, almost forming a Gartley buy pattern. But, it really was below the 0.786 level. It still qualifies in H.M. Gartley's book as a Gartley pattern because his requirement was just an A to B equals CD, does not require a Fibonacci number. So, according to H.M. Gartley, it most certainly did do that. It formed that Gartley buy pattern, and now what we're seeing here is a move off of that. Now, what we also see is that the 200 exponential moving average, which yesterday would have been right around the price level of 126.93, I should say this morning at 4 a.m., that was taken out. So an area that used to be a resistance point now is not a resistance point. And when we take a look at these 4-period moving averages, the 8, the 21, the 50, and the 200, we're very close to getting the 50 to cross over that 200. What all this says to me is that the Euro-Japanese yen wants to power up into that 0.618 retracement level. That would be 128.86. And that's when you least expect it. That's what will pull prices higher. Folks, it is Terrific Tuesday. Have a terrific day. And if you're going to be back in a few, we'll see you in just a few. Otherwise, see you tomorrow morning. Take care, folks.
Yeah, it's always better when we're together.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.